Talk to us about the thesis behind this SPAC deal. Why SPAC? Why now?
Yeah, so we set up the SPAC about a year ago specifically to do a strategic transaction, meaning we were seeking a business that operates at scale in a market that we know well: food, agriculture, biomanufacturing, life sciences, and where we believe technology that exists in our portfolio of businesses could be additive and accretive to their operations. And we know ag very well. Came across Lavoro, which is the largest ag retailer in Brazil, leading ag inputs retailer in Latin America. And this business really has an incredible opportunity to transform how farmers farm in this market. And Latin America is the largest ag export market globally. It is the largest provider of calories around the world. And so this is a massive opportunity because farmers locally in that market don't utilize the best technology. They don't have the greatest productivity, which is yield per acre. And using ag retail, we can actually access that farmer and really transition them to new technologies like biologics, software, and other tools that can massively improve their productivity. And that results in more calories, more sustainability of food production. And it's so impactful because this region is so important globally right now.
So I'm curious about the decision to do a SPAC in general when they've been under a lot of pressure. You know, they've almost disappeared in the last few weeks. Why do you choose that? Why did you choose that as the vehicle?
Yeah, so we set up a SPAC last summer. And so we've been, it's the only off-balance sheet vehicle we have. The rest of our operations at the production board are all balance sheet driven capital. And we build and invest in businesses off our balance sheet. And we did this specifically because there were public market investors that were interested in partnering with us. And we thought that this could be a really great mechanism to find a business that we could be useful to. And that's exactly what we're doing. So we're actually investing $100 million off our balance sheet into the transaction. And several of our businesses are going to be partnering with Lavoro in the future, we do hope, as a way to bring new technology to that important market. And so this is a really great strategic vehicle, and the SPAC is really just a mechanism for doing that and for getting a meaningful ownership stake in a business of scale. I mean, this business, as we show in the presentation, should do about 1.6 billion top line this year, and is doing about 172 million pro forma adjusted EBITDA this calendar year, growing to 277 next year. And so it's a business of scale, it's profitable, and I think that there's a real way to drive further margin improvement and further revenue growth with some of the technologies we can bring to bear here.
Talk to us about deep tech investing, which has been your thing for so long, how it's different in a bull and bear market. You know, obviously these are companies that need funding, but it can be a harder sell when times are tough.
Yeah. So it's exactly, I mean, what you're saying is exactly right. I mean, deep tech investing typically invests on a milestone-based program. So you look at some technical breakthrough, proving something works, and then you raise more capital, and then you prove that the next thing works. And eventually you have a product, and eventually you can sell the product and make the product, and eventually you can scale into the market. And so that takes several years, and capital needs to be unlocked in milestone-based increments. In a market like this, where you can buy US Treasuries and make 4%, or buy a great stock that's got a 5% dividend yield and it's a growing business, it's really hard to find capital into highly speculative long-range investment cycles. So the interest rate environment really challenges deep tech. And it really challenges, and I think we've particularly seen it of late in the biotech market. I don't know the latest statistic, but as of a few weeks or months ago, biotech, roughly 40% of public issues were trading below cash. And so I think it really speaks to the challenge that deep tech businesses face. Now, what we're doing with Lavoro as an example, and what I think happens often nowadays in biotech and will continue to happen with other more deep tech investing cycles, is to partner. So you partner with the large business, you partner with the business that has scale, reach, distribution, cash flow, that can really benefit if your deep tech pursuit unlocks some value or some opportunity for their customer base. And so I think that's what we'll see more of likely going forward, less of the VCs making big check investments early stage, hoping for something to hit, that you'll likely need to see much more strategic partnership happen to get these things across the finish line.
I'm so curious what you make of the Patagonia founder giving away his company to fight climate change. What do you think about it? And is that something more Silicon Valley founders and CEOs should be doing?
Yeah, he's always been an interesting guy. He operates his business in a different way than I think a traditional capitalist thinks about operating their business. And so, it doesn't seem surprising knowing the personality and the way he's talked about things in the past and the decisions he's made. I mean, I think he kind of banned putting financial services firms' logos, as part of their custom embroidery programs that they were having for a while, a few years ago. And look, I mean, it's going to go into these blind trusts, into these irrevocable trusts. And I'm sure that the stewards or the trustees will continue to operate this business in a smart way. I doubt that the trustees are going to basically shred the thing and give it away. I'm sure they're going to continue to run the business, and that the dividends and the profits generated from that business over time can be used to fund, initiatives in climate change mitigation, and I think that that's a very noble way to transfer the ownership of your business rather than just give it away to a bunch of NGOs and nonprofits. Let the trustees that you know and trust operate the business for you that can generate cash and value over time, and then decide where that cash and where that value should be allocated to really drive impact in the world. So it's a great noble decision, and really fits well with the way he's talked about what he's done in the past.
Meantime, I gotta ask you, since the Twitter Musk dispute has been a running topic on your All In pod, you interviewed Elon Musk at the All In Summit. Do you think this deal goes through? Does Musk end up buying Twitter? And if so, how does that change the social media ecosystem?
Yeah, I think, look, there are probably two key things at play here. The first is, what ends up happening in the courts as they go through this legal process. And I saw a great post by a legal analyst a few weeks ago, and I wish I could remember the person's name and reference them. But they said, the Delaware court there, the Chancery Court, is less likely to try and force a deal to close, because then if the parties don't actually close the deal, it really damages the reputation and the integrity of the court. And that there's a case to be made that Musk would just simply say, no, I'm not closing. Do what you want. Give me a fine of $1 billion. I don't care. I'm not closing the merger on these terms. And so this legal analyst pointed out that it's unlikely that they'll close the deal on those, or that the court will try and force the deal. And I think on the other side, he saw value in the community. He saw value in the user base. He saw value in the social network. And I'm sure he still does. And regardless of what he's identified with respect to the bot problem or the spam problem, as he calls it, that there must still be value there. So I would say that based on those two conditions, there's probably a bid-ask gap that maybe gets met still. And I would envision that there's still a motivation to do something here that is probably a function of the true size of the true network of users on that platform, because it is such an important platform. Deep down, he probably still really wants to do something. And on the other side, the court may end up saying, hey, there's some way that you guys, we're only going to charge a fine here, which forces Twitter back to the table to negotiate price, and maybe something happens. So, that would be my middle of the line, kind of middle of the aisle here kind of decision or perspective on what might end up happening over the next couple of months here.